to stimulate growth after its GDP plunges to its lowest level since 2009, cuts interest rates for the 6th time in 11 months. Rate cut from China and stimulus hopes from the ECB propel global markets. Strong earnings from tech companies take the Nasdaq higher by over 2%. Shares in Germany also jumped 2%. Vedanta goes back to the drawing board on Cairn India mergers. Minority shareholders refuse to play ball, may sweeten the deal or even push it back as a last resort. That's an exclusive. The Monetary Policy Committee is a step closer to reality. Finance Ministry moves its cabinet note. Sources say there are signs of convergence between North Block and Mint Street. The government goes slow on rules for net neutrality and over-the-top players like WhatsApp, Viber and others. Government sources say rules are unlikely this year as they see no emergency. That's a CNBC TV 18 exclusive. 60 Indian millionaires buy citizenship in the United Kingdom using the Golden Visa scheme. Transparency International says the move raises fears of money laundering. Heavy Industries Ministry releases its draft capital goods policy, hopes to add 10 lakh jobs by 2025 and increase the total contribution to manufacturing to 20%. The death of another Dalit minor rocks Haryana. Multiple theories over the death of a 14-year-old boy. Parents claim the teenager died in police custody. 2 policemen booked in the case. After days of protests by writers, the Sahitya Academy bends to pressure, passes a resolution unanimously condemning the rising intolerance but urges the writers to take back their awards. The tug-of-war between the Delhi Chief Minister and the Lieutenant Governor continues. Kejriwal cabinet passes a resolution condemning what they call Najib Jung's intimidation tactics with bureaucrats.
And I think the initial decision...
You need to make sure the entire record is correct.
And that's exactly what I want to do.
Well, then go ahead.
Know how to get from where they... What difference at this point does it make?
I wrote a whole chapter about this in my book, Hard Choices. I'd be glad to send it to you, Congressman. I'm sorry that it doesn't fit your narrative, Congressman. I can only tell you what the facts were. Now, I know that's not the answer you want to hear.
You were getting, as opposed to the amount of credit the president's getting. That's true, isn't it, Madam Secretary?
Look, the president deserves the lion's share of the credit.
And why is the White House uptight that you're taking the credit?
I stood next to President Obama as Marines carried his casket and those of the other 3 Americans off the plane at Andrews Air Force Base.
It was supposed to be an acid test for Hillary Clinton and her presidential bid, but after 11 hours of being grilled by a Senate committee, Clinton has emerged largely unscathed. The showdown was over the attack on the U.S. Embassy in Libya, which led to the murder of the U.S. ambassador. Hillary's White House bid has not been rocked, at least it doesn't seem so. Good evening. Thanks very much for joining us on India Business Hour. More on Hillary Clinton coming up for you in just a bit, but first to the action on the Lal Street. The bulls back to their winning ways, but volumes remain muted and the gains were modest. The Nifty is now just a whisker away from 8,300 after gaining over 40 points. The Sensex rose over 180 points. It's now moving closer to 27,500. Mid-caps underperformed in trade today, with the index ending with marginal losses. But the big story tonight, the dragon tries its best to fire up the Chinese economy. The central bank has cut rates for the 6th time in less than a year, signaling the government's determination to meet the 2015 growth target of 7%. The People's Bank of China has cut its benchmark interest rate as well as the lending rate by 25 basis points. The reserve ratio requirement has been cut by 50 basis points. The new rates come into effect from the 24th of October. What's more, the cap on deposit rates for commercial and rural cooperative banks have also been removed. And just to make sure that the rate cuts do in fact percolate down to the consumer, the People's Bank of China has also ramped up its vigilance mechanism, saying regulation of interest rates will only increase to ensure that these moves are passed on by banks as soon as possible. Joining us now to talk about the move from the Central Bank of China is Malcolm Freeman, Director at Kingdom Futures. Malcolm, appreciate you joining us. Do you believe that this is now going to significantly change things as far as China is concerned? This is the 6th cut that we've seen in the last 11 months. The last 6 haven't really done much. Do you believe that this is going to be, in a sense, a game changer?
It's got to start being a game changer because basically for the last 6 to 8 months we've had these continually bad figures coming out of China as their export markets drop and there's a contraction of their internal market. Particularly in the metals, this has led to a very large build-up of inventory, and they have to stimulate their domestic economy to drain down this inventory. And there was an example actually announced today when the Heliang Group have merged with Golden Dragon as the world's largest producer and seller of copper tube, over 450,000 tonnes a year, to try and find economies and better utilisation of capital. When the news came out in London, we had a very sharp rally of about $70 on copper particularly, and about $35 on aluminium, but they've already given up all that ground and gone back into negative territory because the market wants to see this excess metal taken away as the Chinese economy gets internal stimulation to counterbalance the oversupply in the market.
Right. Does this then validate the point that perhaps things in China are far worse than what the official numbers are projecting? Because the need to actually provide this kind of stimulus every couple of months only seems to suggest that the downward pressures are exacerbated.
They are becoming very, very key now to the Chinese economy. They've absorbed a lot, but they're getting to the point now where they have to take this action to really draw a line under it and try and support the economy and their overall markets, because if they don't, they're going to get a retracting internal economy along with attracting and contracting external economy, which net won't suit their long-term gains. So these stimulus have now become key to getting that internal consumption to keep their industry running.
Do you believe that the kind of growth that China is hoping for to be able to cross the 7% mark is now going to be possible with the latest stimulus measures that have been announced, Malcolm?
Everyone's talking about the 7%. There's a certain element of numbers coming out of China can't be verified, but the consensus is by most analysts the reality number will be somewhere between 4 and 5%, which for most other economies would be good, but for China is a fail. But on the other hand, it's not as bad as it could be. They could be running flat to 0.1 as much of Europe and America can be at the moment.
What do you anticipate the global equity markets doing on the back of this? Today, of course, we're seeing a rally across Europe as well as the US on the back of what was announced by the ECB and Mario Draghi 24 hours ago, and then followed up by what the Chinese central bank has announced. But do you see the global equity markets the gains now being more muted as this news gets digested?
I think, yes, you get the overreaction and possibly systematic trading coming out of algorithms when they see a news article and it triggers things. But I think you're right. You'll see it mute back down because the investors will want to see the results coming out in quarterly figures and not just a snap reaction to one set of data. They want to see the new measures actually take effect and the companies have better returns and their profit margins come back up again on a global basis.
And a quick final word, Malcolm, on what you see as far as the commodity markets are concerned of the impact of what the Chinese central bank has announced today.
Overall, the commodity markets will take a good positive view on this. The metals particularly, we've been coming down for 18 months. There's a general consensus we're in the bottoming area of the cycle, and production and consumption are beginning to balance across all the metals. It's just a matter of reducing the massive stock overhang, and this kind of news from China to stimulate the economy and keep the consumption of raw materials going will go down very well with the investors and the commodity markets as a whole.
Malcolm, appreciate you joining us here on CNBC TV 18 and taking us through the implications of what the decision by the Chinese central bank means for global equity markets and commodity markets. Thanks very much for your time. Well, the unanimous view from all quarters is that the move for the stock markets across the world, at least in the near term, is positive. Let's listen in.
I think it is positive news. We have been expecting for some time that the Chinese would cut interest rates again to try to support growth in the economy. And, of course, coming on the back of the fact that the Fed didn't raise rates in the middle of September.
I believe that the market will clearly take a stimulus from that. The question is if it is for the right reasons, because obviously China is not doing this because the economy is in good shape. I think what needs to happen now is that the investors will need to change shoulder to make sure that whereas 1 month ago they were disappointed that the interest rates in the U.S. were not increased, now they will need to be happy again that QE worldwide and first and foremost in China and in Europe is back on the agenda.
We've certainly been waiting for more policy easing in China, but obviously positioning-wise, I think there's still a lot of bears, China bears out there. So the continuation of the rally in China and emerging markets seems to be the logical conclusion, certainly in the short term.
This reflects the fact that this slowdown there is very pronounced and it's very persistent. It's going to continue for some time, yes, and really what it's a reflection of is just how long the expansion was.
All right, so that is the news coming in from the Chinese Central Bank, and we are seeing that pop across global equity markets, coupled with what Mario Draghi had to say. So that's the European market for you. Look at the gains on the DAX now, 3% higher, the CAC 2.5% higher, the FTSE in London about 1% higher. Similar story across the Atlantic, the Dow and the S&P clocking modest gains, but the Nasdaq is flying high. So they've given up a little bit of their gains, but the Nasdaq is about 84 points higher. Facebook has crossed the $100 mark for the first time, so that's the Facebook stock for you at 101. Amazon and Microsoft are also soaring in trade after strong earnings, and of course Amazon now about 7% high and Microsoft has put on about 10.5%. But from equities to commodities, the rate cut has triggered fears of crude oil. Both Brent and NYMEX are seeing some sharp cuts at this point in time. 2% lower for the NYMEX, and Brent has lost about 0.5% or so. And speaking of commodities, this is the big CNBC TV 18 exclusive, pushed to the corner by two large minority shareholders. Vedanta, we learn, is going back to the drawing board on merging Cairn India with itself. The move comes after LIC and Cairn Energy PLC refused to play ball, seeking a substantially sweetened offer. Nantara, you've been tracking this story now. We are given to understand that Vedanta top bosses are perhaps going back into a huddle to discuss what they should do as far as this particular deal is concerned. Will they sweeten the deal?
Ashwin, like you correctly pointed out, the sense I'm getting is, of course, all source-based. Vedanta's top bosses have now realized that this swap ratio of 1:1 is not going to work. LIC and Cairn Energy PLC have made it pretty clear that they're not going to give the approval with that offer, and without that, this merger cannot go through. The two of them each own about 9% in Cairn India. So what I do understand from my sources is that Vedanta is going back to the drawing board, is going to try and study and figure out how much it can sweeten the offer. Now, for it to sweeten the offer, it's not like you can just say tomorrow this is the new offer. There's a whole lengthy process that has to be followed, because this is also a related party transaction. It has to go back to the valuation committee. Then the board of directors, which are not common, the two company boards, have to meet, have to agree. So it is a very long process. So it would seem as if Vedanta's own timeline of trying to get all the shareholder approval by 31st of December is stretching it. So that's one part. Now, what I also understand is that in case Vedanta top bosses feel that they don't want to sweeten the offer, will they put the merger on hold temporarily? That's the second option, but I do understand that is a road that Vedanta doesn't want to go down. It is keen that this merger does take place, therefore it will have to sweeten the offer. The Vedanta board will be meeting on Tuesday, that's October 27th, and that's when we can expect more clarity. However, once again, I'm caveating for our viewers, it's not like you're going to hear on October 27th that this is the new swap ratio, because there is a lengthy process that has to be carried out. We did reach out to Vedanta for a response. What the company said is, as a policy, it doesn't comment on market speculation. Once again, source based, what we do understand is Vedanta is also keen because it wants to access Cairn's cash. Do remember, with the meltdown you're seeing, it's not augured well for Vedanta. We've seen a couple of downgrades as well, the rating downgrades that have come in for the company. Also, it had taken a loan of $1.25 billion from Cairn India. If the merger doesn't go through, Vedanta is going to have to repay that to Cairn India by mid of 2016. Where is that money going to come from? So, like I said, Vedanta is quite keen that this goes through. All eyes now on Tuesday.
All right, Netta, appreciate you joining us with that CNBC TV 18 exclusive. And here's another one this evening. The process of setting interest rates is expected to acquire more transparency. Finance Ministry is taking the proposal of constituting the Monetary Policy Committee to Cabinet very soon. After CNBC TV 18 broke the final details of the composition of the committee, top Finance Ministry officials said the government will not do anything that will undermine the credibility of the RBI in the rate panel. Sapna Das reports that there are signs of alignment between North Block and Mint Street.
There is finally convergence between North Block and Mint Street on the composition of the Monetary Policy Committee, an issue that had caused a rift between the Finance Ministry and the Reserve Bank. According to the Cabinet note, the Monetary Policy Committee will be a 7-member panel headed by the RBI Governor. Apart from the Governor, there will be a Deputy Governor and an Executive Director from the Reserve Bank, thus taking the RBI representation to a total of 3 nominees. The MPC will also have 3 independent experts from finance, economics and industry who will be selected by a search committee headed by the Cabinet Secretary. There will be a government nominee as well who will communicate the government's views but will not have any voting right in the MPC. Decision in the MPC will thus be taken by a majority vote, and in case of a tie, the RBI Governor will have a casting vote. Prime objective of the MPC will be to maintain price stability along with balancing growth concerns. The Monetary Policy Committee will make the mechanism of setting interest rates in India more broad-based and transparent, thus removing any scope of individual discretion in deciding rates. Currently, the power to fix interest rates lies solely with the RBI Governor. In New Delhi, Sapna Das.
All right, that's the latest there as far as the Monetary Policy Committee is concerned. Another exclusive this evening, the government is unlikely to issue rules on net neutrality and over-the-top players like Viber and WhatsApp. This year, at least, sources say the telecom regulator has yet to make up its mind. The consultation paper issued in March has received nearly 2 million responses, with an overwhelming majority supporting net neutrality. Prerna joins us now with the details. Prerna, what is causing the delay?
That's why the regulations on net neutrality and OTT players is unlikely this year, as the TRAI believes that there is no emergency or a regulatory framework at this point in time. We learned from our sources that the telecom regulator is yet to firm up its decision on regulating over-the-top players and whether such players should come under the license regime. We also understand that no reference has been received from the Department of Telecom seeking the TRAI's recommendations on this subject as yet. In fact, the consultation paper that was issued in March received about 1.8 million responses, with an overwhelming majority, that is 95%, supporting net neutrality. But the telecom regulator is currently going slow on this, on net neutrality rules, as it sees no urgency to regulate OTT players such as WhatsApp, Viber, Hike in the immediate term. So clearly the heated debate on whether net neutrality should be a common practice in India, and if OTT players should also be bought under the regulatory scanner like the telecom operators, is expected to take some more time to be settled in. Back to you.
All right, Prerna, thanks very much. So no emergency, and hence we may not see the government and the regulator move on the net neutrality regulations, at least not in 2015. Now, the United Kingdom's most elite visa scheme may be attracting ill-gotten wealth from developing countries to the developed world. That is the word coming in from the world's apex watchdog, the NGO Transparency International. The UK has a scheme whereby any foreign investor who brings in £2 million or more to the country will be given a golden visa. Transparency International fears that this could be a channel for money laundering. Though primarily used by the Chinese and Russians, the report reveals how 60 Indians have used this scheme since 2008.
Drawn up in June 2008, UK's much-touted golden visa scheme was seen as a smart yet simple strategy to attract a regular flow of foreign money into the country. Aimed at the high-net-worth individuals from around the world, the scheme offers a golden visa to foreign investors who commit a minimum investment of £2 million, either in government bonds, share or loan capital, in registered UK firms. Importantly, the scheme allows for the golden visa holder to apply for permanent residency in just 2 years if the investor commits to investing £10 million. In the last 6 years, the number of golden visa holders has jumped over 6 times, from 153 in 2009 to 1,173 as of 2014. According to Transparency International, at least £3.15 billion have flowed to UK owing to the scheme since 2008, which, however, is the bare minimum amount, and the final figure is likely to be much higher. While the Chinese are the highest recipients of golden visas from UK, with 1,126 awarded since 2008, followed by the Russians at 706, India is number 5 on the list with 60 such golden visa holders. Transparency International report reveals that the scheme may be inadvertently being used as a tool to launder the proceeds of corruption. To quell these concerns, the report proposes UK cooperate with countries to develop intelligence sharing and initiate an accountable asset recovery framework to target corrupt fugitives. It also seeks UK Home Office to mandate upfront and public declarations of wealth from the visa applicants. At a time when the NDA government's promise on bringing back black money stashed overseas is increasingly looking futile, a little assistance from UK in that regard may help. In New Delhi, Ranajai Banerjee.
Well, that's the warning there from Transparency International, but news just coming in, and this of course was reported by us on Wednesday when the cabinet had taken a decision, but now the official promulgation has come in from the President. The President has promulgated the ordinance to amend the Arbitration and Conciliation Act. Remember, the government has been trying to push this through, of course, being stalled in Parliament, and the President has also promulgated an ordinance on the constitution of commercial courts. Remember, the Union Cabinet had approved the promulgation of these ordinances on Wednesday, and now an official ordinance has been promulgated by the President as far as the constitution of commercial courts are concerned, and another to amend the Arbitration and Conciliation Act. This will certainly go down well as far as corporate India is concerned. This has been a long-standing demand, also likely to go down well for foreign investors. Now, India is all set to play host to the heads of states of 54 African nations who will be in New Delhi for the 3rd India-Africa Summit, which kicks off tomorrow. And some of the African trade ministers who are already in the Indian capital met their Indian counterpart, Nirmala Sitharaman, the Commerce Minister. And while trade ties between the continent and India was on the agenda, India has also tried hard to convince the African nations to put up a united front at the upcoming WTO meet.
We've discussed about WTO. We've discussed it keeping in mind the context that for the first time it is being held in Africa. And we've also heard him say, I would like to underline, we've heard him say that India and Africa are on the same page on issues related to WTO.
There has been a growing interest in a number of African countries to do more business with the East, and that includes India, that includes China.
We haven't moved out of any country as we speak. We have invested in 17 countries. We are engaged with those countries. We are growing our businesses there. So, and as I said, telecom is a long-term play. Even if you look at a few years back in India, we started with one circle and we went all India. So that is its own, time frame. But as we speak, we're engaged with the 17 countries, and we are happy to do that.
So the India-Africa Summit kicks off tomorrow, and of course we'll be keeping a track of that right here on CNBC TV 18. Here's a quick look of the other headlines that we're tracking. The Finance Minister, who reviewed the situation of pulses prices on Wednesday, met with importers in the capital. They've committed to supply 1 lakh kilos of tur dal per day to government agencies at 135 rupees per kg. The government has also said that it will import more pulses to try and get a grip over rising prices. Let's hear out what the chairman of the Indian Pulses and Grains Association had to say post that meeting.
The association has promised to put at the disposal of any government agency 1 lakh kilos of tur dal on a daily basis at a price of 135 rupees a kilo, which the government can then use and put it in its public distribution system and distribute it at lower levels.
But the government continues to take stock of the prices of pulses, and there have been raids that have been conducted across the country. Now, the Department of Heavy Industries has released a draft policy which proposes to set up a national capital goods policy which aims to increase the share of capital goods contribution to total manufacturing from 12 to 20% by 2025. The policy has set ambitious targets for the sector, including increasing employment by 20 lakh jobs over the next 10 years and increasing exports to 40% of the total production in the country. Housing loans are the flavor of the season. Banks are more interested in doling out housing loans, considered a much safer option compared to large project loans. But RBI Governor Raghuram Rajan, while speaking at an event in Hyderabad, has a word of caution for banks. He says that banks must ensure that they do enough to mitigate risks while giving out such loans.
Some of the banks are sticking to traditional customers, offering them traditional products in the traditional way. And going forward, clearly that business is going to come under increasing competition, under increasing threat. One example of this is, we had a number of setbacks in large project loans. And so increasingly the flavor of the moment is let's all make housing loans. Of course, when you make housing loans, you better be careful you're not picking up the lower risk, the higher risk housing applicants and venturing into an area which is already well served, at least through traditional means. How do you make sure that as you move more into this area, you're mitigating risk and making the right kinds of loans? Perhaps the use of the data that is being acquired either by a bank, by the credit information bureaus, but also that's available on social media might be useful. How do we use this? Very important question.
Well, that's the word of caution from RBI Governor Raghuram Rajan. The Central Bureau of Excise and Customs has increased the limit for arrest and prosecution in case of outright smuggling or misdeclaration of baggage from 5 to 20 lakhs. Limits in cases of evasion of taxes or wrongful utilization of input tax credits have also been hiked to 1 crore. The government has also decided to revise the procedure followed for arrests in cases so as to ensure that arrests are made only in cases of extreme negligence. Now let's talk American politics. High drama on Capitol Hill yesterday. 11 hours of testimony from Democratic presidential frontrunner Hillary Clinton, and some say she successfully survived the marathon congressional hearing on her handling of the 2012 Benghazi attacks during her time as the Secretary of State. NBC's Andrea Mitchell has more.
It was supposed to be about Benghazi, but it soon dissolved into bickering.
I don't care if he sent it by Morse code, carrier pigeon, smoke signals. What is relevant is that he was sending information to the Secretary of State.
Would the gentleman yield?
I'll be happy to, but you need to make sure the entire record is correct, Mr. Congressman.
And that's exactly what I want to do.
Well, then go ahead.
While they argued, the star witness tried to stay above the fray. Unlike in 2013,
what difference at this point does it make?
This time Hillary Clinton was poised, practiced, pushing back with put-downs.
I wrote a whole chapter about this in my book, Hard Choices. I'd be glad to send it to you, Congressman. I'm sorry that it doesn't fit your narrative, Congressman. I can only tell you what the facts were. Now, I know that's not the answer you want to hear.
At other times, her face said it all, laughing off unwelcome suggestions, showing impatience, irritation, or scorn, reflecting days of preparation at home, sent off to battle this morning by her husband, Bill. The Republicans were also armed and ready.
Happy to bring breakfast in, but we ask a yes or no question. It'd sure be helpful if we could get to the answer. It wasn't a trick question at all.
They were concerned, that is, the White House, to the amount of credit that you were getting as opposed to the amount of credit the president's getting. That's true, isn't it, Madam Secretary?
Look, the president deserves the lion's share of the credit.
Why is the White House uptight that you're taking the credit?
And a fierce dispute over a controversial former Clinton political aide, Sidney Blumenthal, barred by the Obama White House from working at her State Department, but sending private advice about Libya to her private email account.
And Madam Secretary, he had unfettered access to you.
I don't know what this line of questioning does to help us get to the bottom of the deaths of 4 Americans.
I'll be happy to help you understand that, Madam Secretary.
But it was Clinton who spent the most time talking about the victims of the attack.
You know, I would imagine I've thought more about what happened than all of you put together. I've lost more sleep than all of you put together.
Information officer and Air Force veteran Sean Smith, CIA officers Tyrone Woods and Glenn Doherty, and Ambassador Chris Stevens.
I stood next to President Obama as Marines carried his casket and those of the other 3 Americans off the plane at Andrews Air Force Base.
Clinton has been here now all day into the night, testifying she never received a request for more security from Chris Stevens, although the ambassador made those requests, hundreds of them, to security officials. But for all the talk about Hillary Clinton's emails, she said she did most of her business offline in classified briefings and didn't even have a computer in her State Department office.
Well, that's Hillary Clinton for you. But coming up next is the e-commerce boom losing steam. A Young Turk special report when we return. And is the Samsung Galaxy Note 5 worth your money? Stay tuned to find out.